All right, let's get this show on the road. Thank you everybody for joining us today. Welcome to Climate Tech Investors Predict, hosted by Evergreen Climate Innovations. My name is Paul Seidler. I'm Evergreen's Managing Director. Greetings from Chicago, where it is a beautiful sunny day, a balmy 18 degrees. We are going to have a lot of fun today. If we have not met before, in case you're not familiar with our organization, we are Evergreen Climate Innovations, formerly known as Clean Energy Trust. We've been at it for about a decade. We are a nonprofit that supports climate tech entrepreneurs. We have a pre-seed and seed stage venture fund. We make direct investments into climate tech startups in the broader Midwest and provide other types of support to the broader climate tech innovation ecosystem. We have a great, fun event lined up today. Quick disclaimer, today's event is purely for informational and entertainment purposes. Please do not base your investment decisions on the information you received today, albeit very credible, exclusive information. So let's take a look at today's agenda real quick before we bring in our speakers. We're going to do a very quick 2021 year in review. We're going to ease into 2022 with a few things of what we can expect with respect to market trends. We're going to play a fun round of retro magic 8-ball, and then we're going to get into our nitty-gritty predictions for 2022. So thank you again for joining us. Let's bring in our esteemed participants. I don't want to call them panelists, they're more like contestants, the way we have today set up. So we're going to do some introductions. Can we get some cameras on? Shayle, Shilpi, Johanna, there they are. You know, it's beautiful. I want to put together a great event. I just call it my friends. This is such a generous, wonderful community that we're all part of. And so I called up a few of my friends. They all said yes. And I want to introduce you to them right now. Shilpi, let's kick it off with you. Please, quick intro.
Sure. Thanks for having me, Paul. Shilpi Kumar, I'm a partner with Urban Us. We're an early stage fund focused at this intersection of cities and climate. We have both a pre-seed seed venture fund as well as a credit entity. My background is in commercializing industrial hardware and have been transitioning those skills from smart cities and industrial IoT into climate tech. And it's been an honor. Great to be here.
Awesome. Thanks, Shilpi. Johanna, Dr. Wolfson, I should say.
Hi, everyone. I'm Johanna Wolfson. It's great to be here. I am calling in from Cambridge, Mass. today. I'm with Azolla Ventures, which is a brand new fund launched by Prime Coalition. I've been with Prime Coalition for 4 years. This is our second fund. And it's all about bringing catalytic capital together, which is uniquely risk embracing to support high risk, early stage climate tech innovations, many of them hardware, but not exclusively, that might not otherwise get off the ground, and that we can have an early part in helping form and advance to the next stage. So I'm delighted to be here and looking forward to getting into it.
Thanks, Johanna. And Shayle, quick intro and also share the exciting news that you shared with the world this morning.
Sure. Well, exciting to be here. So I'm Shayle. I am mostly just Paul's friend on call for whatever he needs at any given time, but I moonlight at a firm called Energy Impact Partners, which is a venture firm with about $2 billion under management total across a number of different strategies. The thing that makes us kind of unique is that we're backed by a coalition of over 40 energy, industrial, and other technology companies, large strategics, who we work with to try to drive innovation faster toward decarbonization. And what I could announce as of this morning, because we just finally were able to make it public, is that I lead a fund that EIP launched just last year called our Frontier Fund, which is dedicated to revolutionary technologies for deep decarbonization. So think deep tech plus climate under one umbrella.
Awesome. Thank you, Shayle. So you have 4 early stage investors here, and the earlier you invest, the farther into the future you need to be able to see. But before we get to the future, let's quickly talk about the past. 2021 year in review. I would love it if each of us reflected on one big story from the year, and also maybe one story from 2021 that surprised you? Shilpi, you want to kick off with your two stories?
Sure. So I think one big story from the year is that vaccines didn't kill the pandemic. And they also, we didn't get rid of supply chain issues after the holidays. So I think there's been this 2021 supply chain downturn was surprising. Now we're sitting here wondering like what all the implications of the pandemic are, not sure what's coming from the supply chain, not sure what's coming from the Omicron, not sure what's coming from Delta. And the compounding news was surprising to me. I spent about 2 months in 2020 working on post-pandemic reflections on what COVID would do to the economy across every industrial sector, as a good early stage investor needs to do. And they're all pretty useless considering how things have been shaken up. So I think one thing that really surprised me is also the number of other firms that are getting into asset financing and credit at the earlier stages for climate tech specifically. So I think we've been launching this credit fund, and all the conversations I was having last year were like making a case for it and trying to prove out why, venture debt wasn't sufficient as an opportunity for climate companies to finance their hardware. And, now it's like everyone else is also launching credit funds. So that was, I think, a surprising trend that is really good for all the companies in the ecosystem to have lots of options there.
Great, thank you, Shilpi. Yeah, definitely good to have more and more different types of capital available to startups. Johanna, bring it. What do you have from 2021?
I think I thought about this as kind of clean tech headline. I don't know if the prompt was meant to be broader, but in terms of clean tech headline, what I reflect on is big corporate sustainability commitments in general, but also issuing carbon tenders in particular, which have created this initial kind of small but mighty market, voluntary market. That's a bit of a cheat because that's kind of from 2020 combined with 2021, but those years blend together, as we know.
That works.
But I think like it's just been really interesting to see. And I think for me, those combined with some other big corporate actions, one that I got excited about was actually Amazon's, where they like went so deep on their emissions analysis that they know the emissions of attributable to a single motor on a conveyor belt. And they rolled that up to their very, very wide logistics level. And anyway, so that put together with kind of the early carbon market action, I get excited about those corporate commitments because I think for me, they're reaching a level that looks like real market pull. And not just kind of marketing efforts. And I hope to see more of that. I find it pretty exciting. Maybe to bookend that on the same theme in a way, something that surprised me was, despite those early carbon credits being purchased and being put up to purchase, I was really surprised by the activity in the direct air capture sector by investors this past year, and really maybe more the past like 6 to 9 months. I thought it moved so fast relative when we made our first carbon capture investment in 2019, which is not that long ago. It felt like really fringy and like, oh, we're taking on policy risk. That's like crazy. And to the point where we're seeing a DAC company come across our pipeline like once a week, and their rounds were immediately being oversubscribed. Some great ideas, some not so great ideas, but like the pace of that investment trend change really surprised me.
Yeah. That is impressive what you mentioned about Amazon. I mean, to know their energy demand for a single conveyor motor, considering how many conveyor motors they have and how many conveyors they have and how many logistics facilities they have, that is intriguing. Shayle, one big story from 2021 and something that surprised you.
Well, I agree with everything that's been said. Another thing that I think 2021 in the context of climate tech is difficult to talk about without talking about SPACs. So I'll take that one. SPACs turned out to take something like, I've been trying to track this and it depends on your definition, but I looked this morning. So I've got a list of over 35, I think what you would call climate tech companies that made it into the public markets basically all in 2021. There are a couple in 2020, almost all through SPACs. So it became this like vehicle for liquidity for early investors to raise a ton of capital to get into the public markets. It's like amazing thing for all these companies, and especially ones that were like really capital intensive and doing big things. It has been kind of a wild ride for those companies though, once they made it into the public markets. So another stat for you is of those 35 that I was tracking as of this morning, 6 are up relative to the price they SPAC'd at. Everybody SPACs at $10 a share. So only 6 are above $10 a share today. Now that could change tomorrow, but we're going to witness over the next couple of years this entirely different paradigm where there are a ton of these companies, many of which are still pre-revenue, potentially pre-revenue for a number of years, that are in the public eye and have to like issue quarterly updates and all that kind of stuff. So I think it's a double-edged sword for climate tech. It's both an amazing thing that like is catalyzing a lot of earlier stage activity, and it's kind of dangerous at the same time. What surprised me in 2021, maybe this is me just being like a doe-eyed optimist, but I was surprised that we did not get any major climate legislation passed, specifically Build Back Better. It kind of seemed toward the end of 2021 like, all right, there's going to be some horse trading on the details of this thing, but something's going to go through. And, there were some provisions in there that even if you chop them down a fair bit, were going to be pretty transformative for certainly the like clean energy landscape and a bunch of other stuff. Direct air capture being a great example would have been, there's a $50 tax credit for carbon capture today. Direct air capture would have had, I think, $180 tax credit. So really big deal. Not to say it won't still happen. There may still be some movement on it, but that was my one. I was surprised that nothing got done at the end of the day.
Yeah, Shayle, on the SPAC topic so it doesn't get talked about that often on the SPACs that are announced, but then don't get a deal done. It's that 2-year window. And so some of these SPACs that were announced in 2020, they might in 2022 end up not finding the right deal and returning money to investors. Any sense of where things are headed there with respect to climate SPACs?
It's an interesting dynamic in that market. So right, to your point, so the way it works is you take a shell company public, that's your SPAC. You then have a 2-year hunting license to go find a company to merge with that then it de-SPACs and becomes the public company that you replace the shell with. So there is a ticking time bomb for any SPAC once they go public. And what happened is we had this wave of SPACs, not just in climate tech, right, but in a bunch of sectors. But then the market started to cool off. The overall market started to cool off. And then more importantly, in the context of SPACs, there's this like other set of parties in the transaction called a pipe investor, who usually throws in cash in addition to the cash that the SPAC has in trust at the time of the IPO or the time of the merger. The pipes started to disappear because they all pay generally the $10 IPO price. So as SPAC prices started to tank, the pipes started to become more difficult. That made it more difficult to get a de-SPAC merger done. And so now we're sitting on this continued supply-demand imbalance where there are still a lot of SPACs out there that are hunting and have every incentive to get a deal done, including those that have like specified we're a climate tech or an ESG SPAC or something like that. Not as many companies that are willing to go down that path at this point because they see the risk associated with it from a lot of other companies. So we're seeing less transactions get done, but we're not yet at the point where most of those SPACs are nearing the end of their 2-year hunting license, at which point they may end up getting a little bit more desperate. So it'll be interesting to see, 8 to 12 months from now, whether there's like a second wave that comes. And I think it'll be in part dependent on what's happening in the market at that time.
Yeah, it'll be interesting. All right, well, my big story for 2021 to reflect on, similar to Shayle's, you can't talk about 2021 without talking about climate SPACs. You also can't talk about 2021 without talking about climate VC funding. And so digging into PitchBook in 2021, there was $53 billion that went into climate tech and clean tech startups across all stages, compared to 2020, 30 billion. So up from 30 billion to 53 billion year over year. The average post-money valuation for a closed round in 2021 was 22 million, up from 12.5 million. So valuations going up, investment going up. But that's all great. It's not all peaches and cream from my perspective, because a lot of this stuff is later stage funding. And of the 53 billion that was invested last year, about half of it went to automotive and batteries. And there, there's a lot of stuff that needs funding, but it is great to see this kind of momentum. And the story from 2021 that surprised me the most was this LanzaTech partnership with Lululemon. LanzaTech is a late stage growth stage company based in the Chicago area. They got started in the Clean Tech 1.0 wave. They lived to tell about it, and they are now a pretty sizable operating company with installations all over the world. So LanzaTech historically has been this carbon capture company that is installing their systems in steel mills all over the world to capture the carbon and then use their proprietary their proprietary microbe to convert captured CO2 into ethanol. And then, sell the ethanol into commodities market. That's typically what we've thought of LanzaTech as. But now they announced this deal with Lululemon where they're going to be converting CO2 into ethanol, which will then be converted into, what is it? Let me check my notes, into monoethylene glycol, which is then converted into polyester, which is then used to make really nice yoga pants. And I just think that's cool. I was not expecting that to happen. And you know what? If those yoga pants cost an extra couple bucks and they're made out of recycled CO2, you can count me in. So let's now move on to talking about the future. I thought we would ease into it. You got to do some stretching before you start making like real predictions. So let's talk about some market trends in 2022. Shayle, I want to go back to you. A lot of these climate tech startups depend on, a lot of them are B2B businesses. They depend on buyers to have a budget for what they are selling. So with respect to climate solutions, where do you see big corporate budgets increasing the most in 2022?
I think the long-term hope here is that there is no such thing as a corporate budget for sustainability or climate or anything like that. It's just like embedded in everything that they do. It never needs a separate line item. Like that's the end state. We're not necessarily there in a lot of sectors yet. I think the obvious answer, like where are corporate budgets showing up for the first time, is all around sort of carbon management for the corporate, right? So the carbon accounting world, and then what's their mitigation strategy and so on. That's like an entire category of largely enterprise software that just didn't exist and is now showing up for most corporates. But I actually think if you're just thinking in terms of pure dollars, like where is the most new money going to get spent? It seems to me it's more likely to be in the area you actually just talked about, the sort of LanzaTech Lululemon example, which is, I think that companies, particularly B2C companies with consumer brands who want to take advantage of the brand perception boost that you get from being green, are increasingly going to buy clean, basically. We're going to see more of that procurement of what is otherwise generally like big, high volume, low margin commodity products like monoethylene glycol or like fuels, right? Why are airlines purchasing sustainable aviation fuels? All that kind of stuff. So I think we're seeing that happen across a bunch of different sectors, particularly in heavy emitting sectors, which is like fuels, steel, chemicals, cement, and so on. I think that's where budgets are showing up in like a substantial way in faster than I expected them to.
Mm-hmm. Yeah. Yeah, I could see the consumer segment kind of being first to adopt, where there's a little more ability to price in a green premium for some of those products. Shilpi. So with inflation on the rise, interest rates on the rise, signs of the market slowing down, what impact on the momentum that we're seeing in climate tech do you think we might see from a slowing economy?
Yeah, it's interesting. Like I've always thought of early stages often incubated from mainstream market norms, or sort of the trends are a little bit delayed on how like seed companies are affected by a slowing economy or affected by inflation. It's interesting. Shayle was talking about the kind of like consumer adoption being a quicker moving corporate interest, when also like the consumer price index, just like where we're seeing inflation have the most early impact and sort of increasing the the cost of like normal goods. And so, there's, I think, two lenses to think about inflation from a climate perspective, which is the need for alternatives is urgent for both the companies and the consumers. And there is a decrease in, I think, thoughtless consumption in a lot of ways because the prices are going up. So the idea, I'm no economist PhD, so I'm not going to speak to exactly what happens with these the inflation on the overall economy. But I think when we think of the industries where there's going to be momentum, alternatives to the mainstream, specifically thinking about electrification with the cost of fuel and the sort of long-standing increase in gasoline prices, I think is something we've been looking at in terms of what electrification will come in. I think the other lens to think about it is that so much money is going into climate tech from a capital markets perspective in, funds being raised, that the funds actually need to be deployed in the next 4 to 5 years, kind of regardless of what's going on in the economy, as that capital has mostly been committed. And so our early stage company is going to actually see a difference from a capital buoyancy perspective. I'm not sure. So it's like, there's the customer angle and then the capital angle. And I think they're a little bit in tension, but the, climate solutions and the overall momentum within ESG, despite whether we have a federal bill or not, I think there's going to be, some positives for climate companies outside of historic industries.
Right. Typically, like if the economy slows down, market starts crashing, you might see a venture fund start to hoard its cash for existing portfolio companies. But you just made the point with new funds getting set up, they don't have that existing portfolio. They got to go out and deploy the capital over the next 3, 4, 5 years, which is perfect transition to what I wanted to ask Johanna about, which is these huge funds that were launched in 2021 focused on climate, several of them. Where's that money going to be allocated? Where do you see this year benefiting the most? What sectors, what technologies are going to get a lot of funding from all this new capital coming to climate tech?
Yeah, I think, so many new climate funds. And I think in part, my thinking on that is informed by who's launching them. And I also think it might look different this year, maybe next year versus if the trend continues. So what was striking to me about all the funds that were announced was that many of them were coming from hedge fund sources or private equity sources or, places like that weren't really venture driven at their core, which, can be great. It's good to kind of build other sources into a capital stack for these companies, but depending on what types of investments they're making, it could feel more like dabbling. So where will that all go? It's probably mostly like where it has gone in the past, or what, if we look at 2020, right? It's like I think it'll be a lot of mobility and batteries, probably, a fair amount in food, both agriculture and supply chain, and maybe supply chain management more broadly, to Shilpi's earlier point. I think some other areas that have tended to look less attractive will pick up speed, at least temporarily. Like we're starting to see that in cement and building materials, which is an area we're active in. There's a little bit more interest, I think, around those, and that's good. I guess the reflection I would share is that some people watching all this capital flow kind of think that the hard tech problem that we often talk about in circles like this is solved. And I really don't think so. I'm not optimistic about that. I think as we get through 2022 and beyond, those funds will revert to allocating the majority of capital to capital light companies if they weren't already doing so at the beginning, unless there's a specific mandate otherwise. So I think that there's like a temporary surge and more kind of hard tech industrial investing, but I haven't seen that baked into as many of those announced funds theses. And so I might suspect that the front end of their portfolios will have a little bit more of that, and the back end will have less. And so that's, as a hard tech investor, that's something that I'm pretty keen to watch and see if that kind of interest in hard tech can be sustained. But I'm doubtful that it will be.
Yeah, well, that would be disappointing, and certainly the pending legislation could have an effect on that outcome. All right, let's start having some fun here. Let's move on to. Did you guys have a magic 8-ball when you were a kid? I mean, I certainly did. It helped me sort out a lot of, life planning issues, and so.
That's your investment committee, as I understand.
That's right. That's right. It's how we make all decisions, really. So we're going to play our magic 8-ball game. I've asked our lovely contestants to, they're allowed to use their magic 8-ball for this section. They're not allowed to use it for the next section. So where I want to first peer into the future is there's this announcement a couple weeks ago about this new company, GAF Energy, a spin out of GAF Roofing, owned by Standard Industries, big roofing company starting a solar tile company. So Shayle, using your magic 8-ball, do you think that over the next 5 years, GAF Energy will sell more solar roof shingle installations than Tesla? Interesting. All signs point to yes. What is Johanna? What's your prediction? Outlook good. Shilpi? Very doubtful. Ooh. All right. Well, Shayle, tell me your perspective on this one.
First of all, GAF is legit, right? Not everybody knows them, but GAF is a huge roofing company. They've been in the solar business for over a decade. I worked with them a little bit in a previous life, long ago, doing solar. Like they're serious, and they've actually been doing the solar roof tile thing a lot longer than you would think too. They just made the public announcement about it recently, and they're sort of like quietly actually doing it, where what Tesla has been doing is talking about it since 2015 and doing almost none of it. And you talk to anybody who's been involved in the solar roof at Tesla for a long time, like it's been a bit of a mess. I think anybody would tell you that. Probably Elon would tell you that, as long as you catch him at the right time. It doesn't really seem to me that they've figured it out. And it also just isn't, like, Tesla's got a lot going on. This is not the primary focus. Solar never has been, probably never will be for Tesla, in my opinion. So they're going to make a ton of amazing cars, and they're going to shoot the roof off of the EV market, but I am bearish on Tesla and solar.
Shilpi, the dissenting opinion?
I think it's, I had to balance out. I'm a low consensus person in general, but I think this, like, can someone get in Tesla's way? So if GAF can prove out sort of like what is the cost response, like what geographies is there going to be pickup, I think Tesla will just like show up and steal the show. I think they're kind of they are shameless in their execution, and being able to kind of like prop the story and the shininess. People had been doing backup power, and then like the Powerwall became a mainstream conversation. I think the solar shingles haven't taken off as a main business unit yet, but like if someone else can get the momentum and really start to drive it, I just think Tesla will put some gloss and glamour on it. And so there's a whole segment that responds to that gloss and glamour more so than, the rugged execution of a roofing company. So I can see it going both ways, but.
Yeah, well, a little competition might be exactly what they need to get it figured out. And if they do get it figured out in terms of production, like from what I've seen, they do differentiate. I think that, Tesla's roof shingle, in theory at least, I believe, is a higher efficiency product, and GAF is clearly going for sort of like the lower cost, lower efficiency approach. They have a different form factor, so we'll see how it plays out. All right, next Magic 8. Yeah, I want all three of you just throw it up at the same time. So the next one, geoengineering. Will geoengineering become an investable sector in the next say 5 years, 10 years even? A controversial topic. Outlook good. Very doubtful again. Shilpi going her own route. Johanna, we've discussed geoengineering in the past. What are your thoughts on this topic? Or actually, do you want to share with the audience what exactly we're talking about?
That's probably the right place to start. So geoengineering, it is a controversial word. Most often, if you would look up what is geoengineering? You'd probably read a definition that has, well, let me say my definition. It's intentional modification of the Earth's systems to achieve global cooling, to counteract the unintentional changes we've made that have caused global warming. So most often you would probably see, you know, some wild looking ideas like solar engineering, putting aerosols into the atmosphere, maybe putting reflective surfaces in the ocean or the like. But there are also much more mild things that most people would categorize under geoengineering, like high albedo crops to reflect more of the sunlight, or
like broadly
carbon
DCR
removal.
or DAC, is
Absolutely.
technically part of geoengineering, just a lot less
Exactly. So
aggressive
it is a wide spectrum, and that's probably the most important place to start. But is it investable is like a totally different question, right? So
well, forget DAC or other CDR things, like the more controversial, more aggressive forms.
Well, even there's a spectrum, because we've looked at some interesting carbon removal that's not DAC, but that is like related. Like if you think about sprinkling basalt all over the forest floors, right? I mean, you're moving minerals around for the purpose of changing the atmosphere. But putting that aside, I mean, I think there's also like softer approaches that could be explored that are reversible. But to the question of, is it investable? Like this is a really, it's sad. Like I said, outlook good, which is really, really bad. Like the outlook is good because I think that there will be climate disasters that like make everyone panic and make governments willing to pour billions of dollars into emergency solutions. 5 years is probably stretching it, or like probably borderline, but yeah, if you edit in the moment as you did to 10 years, I think it becomes much more likely. And so the fact is, if governments are panicking and throwing billions of dollars to solutions, possibly unilaterally, that's another topic, then, you know, would it have been smart to mature companies that can deliver those solutions? And that's what we do as investors, is we try to mature companies that can deliver solutions at the time that they're desperately in need. So that's why I think there's a case here. But it's not a fun thing to think about.
Yeah, and like, would the business model be like maybe there will be a customer or maybe not, and if there is a customer, it's like pushing the red button, and it's a huge, talk about like lumpy revenue stream. It's like, right? How does that work?
It could be, but I think that there's actually there's actually some interesting co-benefits in some cases. Like this is not a geoengineering company, but a company that I really like, that I've taken a lot of inspiration from, called Coral Vita, does coral planting. And there are a lot of co-benefits to what they're doing. I mean, they're doing it for the purpose of ocean betterment. There are co-benefits and ways to monetize that around using ecotourism. And, you know, you could imagine similar co-benefits around improvement of fish populations for, you know, local economies and the like. So this is not like a super explored idea, obviously, but there could be those other revenue streams if a company is able to crack the nut. Got it.
Shilpi.
Yeah, I think I'm just too fundamentalist of like needing there to be a real business model to endorse geoengineering in general. But like, I think this comes to the like, don't look up metaphor between the like, you know, who's pouring money into the thing or finding hope from the idea that there's going to be like these radical solutions that just like save us, versus the idea that we have to like slowly piecemeal actually transition our world in you know, slow and boring ways, is a way to actually build business models that support real benefits and real outcomes. One of the things that's specifically about geoengineering that I think is under discussed is the unintended consequences on ecosystems and communities that are often as part of the sort of like arbitrage of trying to have this like high leverage radical solution that shifts, and then the swath that gets overlooked. And I think my hope comes in that there's actually more attention paid to those consequences. And so governments will be accountable to like the actual ecosystems and communities that are under consideration for like massive changes. So yeah, geoengineering makes me exceedingly nervous.
Yeah, question of, yeah, who's the buyer, what's the market? So let's move on. Let's dial it back, maybe something a little more practical, but equally difficult to predict. Will the climate portion of Build Back Better get passed in 2022? What do your magic 8 balls say?
I swear mine's not broken.
Burn once. I can't. What is it? I can't be wrong twice. I don't want this to be the right answer.
Very doubtful, Shayle. Yes, for Johanna. Shilpi, what's yours?
I had outlook good. I mean,
outlook good.
I think not including like the amount in here is probably it makes this question a lot easier. Do I think it's going to get negotiated down and passed like with some weird overnight headline where none of us have anything to actually celebrate before midterms? Probably. I think it would be. I wouldn't be shocked if it didn't pass at all, but that's what I think will likely happen.
Yeah. All comes down to the most powerful man in the world, Senator Joe Manchin. So any other opinions on that topic, or should we keep cruising?
No, I agree.
Who knows?
All right. So Dogecoin went to the moon and back in 2021. Web3 is all the rage right now. How do we feel? Will Web3 / crypto, DeFi, will this play a meaningful role in decarbonization and climate tech in the next few years? Meaningful is, up for debate what that means, but in your magic 8 balls opinion. No, outlook good, and no. All right, Shayle, you've spent a lot of time talking about this stuff. You covered the whole ICO debacle from 2-3 years ago. Where are you at with Web3?
Well, I'm a white American male, so I obviously have to spend a lot of time talking about crypto and Web3. No, I mean, look, I'll probably regret this answer, but I think that the way I think about it now, so like there's a ton going on right now. There's like a new project every week, some Web3 climate crossover thing. And there's undeniably, there's going to be a big wave of excitement around it. And then a bunch of it is going to blow up and go nowhere. And, we saw the same thing happen with blockchain plus energy a few years ago. And there were a bunch of ICOs and basically none of those went anywhere. What I do think is interesting this time around is that it's happening simultaneous with this emergence of a ton of interest around CDR, carbon removal, DAC within that and all this kind of stuff. And that stuff needs a market. Like ultimately, and this is exactly to Shilpi's point, like if that's going to work, let alone geoengineering or whatever more exotic stuff you want, you need buyers. We don't actually have that many buyers yet. We have a small list. Somebody actually just put together a list of all major corporate purchases of CDR. So far, it's like $30 million in aggregate, right? Not a big number. We need probably $1 trillion by mid-century. So if there's a way to bring new capital into the market to accelerate this sort of early scale up of a bunch of these technologies, I think that's impactful. Will Web3 and all this crypto stuff have an opportunity to do that? Yeah, I think at least at the margin, because there is a lot of money currently flowing around in crypto world. And there's a bunch of projects that are basically trying to bring various kinds of carbon credits, initially, admittedly, not the good CDR stuff, but the really crappy, like Vera standard forestry stuff on chain, and then use that as a mechanism to buy up the price of credits, ultimately going to be as a mechanism to finance future projects. I think the next iterations of this stuff is going to become more robust and using the things that make blockchain interesting, the ability to have trust and transparency, which has been one of the challenges in carbon markets for a long time. So to me, it just comes down to like, there's a lot of, it's messy and complicated, but if this unlocks new demand in the form of dollars converting to some kind of cryptocurrency for early adoption of CDR projects, I think that's impactful.
Yeah. Great. I think we got to keep this one moving along. So for our last Magic 8-Ball prediction, I've been reading about space-based solar power, so like 24/7 solar power beamed from space. Will this ever be a thing? That's my question.
Defined as like,
will
will we
this
ever
ever be a
have it
thing?
at all, or as?
Or is it a meaningful fraction of power provided?
On Earth? I'm not talking about Mars. Like, yeah, on Earth, yeah, a meaningful amount of power, part of the generation mix. All right, so there she goes, Shilpi, surprising us again. All right, Johanna, do you want to just like level set what this is for everyone?
No, you did it. I mean, we are talking beaming solar power direct from space. You know, we all have seen satellites have been solar powered for a long time. That's in some ways how solar panels got their start. We know it's a great source. Beaming it down efficiently, cost effectively is like really
Is it like it's converted though into some other form of energy?
Often RF is my understanding, but maybe there are different versions of that. I think my question went to kind of the same place as Shayle. Like, this is awesome science stuff, and every couple of years you hear about breakthroughs in it from JLab or NASA, and I think like it is possible that eventually we will crack the nut on getting solar power on Earth, but I don't see like the way our cost curves are coming down here on Earth.
Right.
I don't see the motivation to put like enormous resources behind it in the coming years to make it a significant fraction of our power sources, and so that's why I would say no. But of course, the open-endedness of the time frame makes it a little bit tempting to want to say yes, because I love the science projects.
Can I just point out, most folks don't know this, but PG&E, the largest utility, one of the largest utilities in the country, my utility here in Northern California, signed a PPA in 2009 for 200 megawatts of space-based solar from a company called SolarWren. The project was supposed to come online in 2016. It obviously never did, but there was an actual utility PPA for one of those projects.
Huh. Is that because it's cheaper than burying all the power lines that they have to deal with, or like?
This
was 2009. They didn't yet know that they were, going to set a bunch of wildfires and go bankrupt.
Right. Okay.
I think that my reason for being at least open to it is I spent a few years working in radio tech and like the different things with LoRa and like, radio-based sensors, awareness, being able to know if there's people there and being able to know if certain chemicals are present, and just like the power of those, the pace of development in that sector. I feel like I will never be able to keep up. And I'd say the other thing is like Starlink actually exists and has, paid customers, which I don't know if I saw Starlink becoming, if someone had said, that's how we're going to have internet connectivity in remote places a few years ago, I don't know if I would have been able to predict that either. So, I'm not on like Elon positive category. I don't want to put myself in that category, but I do think that some of these things could surprise me.
Great. All right. Well, that concludes Magic 8-Ball section. You need to now put your Magic 8-Balls away. You cannot use them for the next portion. We're going to get into a real 2022 predictions now. This next section, I've got for the audience, I did not share this next set of questions with our fine contestants today. But what I'm going to ask them to do is for each of them to predict a number, and each one will be a different number for the end of 2022. So let's plug right ahead. For the first one, we're talking about fusion. In 2021, there was nearly $3 billion of private venture funding that went into fusion startups that are still decades in the making from being commercially viable. Among this $3 billion, there was a whopper $1.8 billion round for Commonwealth Fusion. This was pretty remarkable in my eyes. So my question to the three of you is, how much funding will go into fusion startups in 2022? Johanna, you're up first. What's your
Oh.
number?
This is a great question. Okay, I'm not gonna editorialize. I'm just gonna put out 9 billion.
All right. Shayle.
I was gonna say 6 billion.
Shilpi.
I'll go with 4.
Great. We are not defending these. We are just plowing right through them. The next one. We have Rivian. This is a fun one. So Rivian IPO'd on November 10th at, was it $78 per share, and a market cap of $66.5 billion. Later that week, the stock surged to a the market cap as the stock surged rose to $127 billion. And then it came back down. And yesterday, 2 days ago, the stock price dipped below its IPO price. And as of yesterday, the market cap was $62.5 billion. On the last trading day of 2022, what will be Rivian's market cap? Shayle, you're up first.
So I'm going to say 45 billion, but I want to say, despite the fact that I am super, super excited for the version that has the camp stove that pulls out of the truck.
Oh,
it's literally
it's
the
super
coolest thing I've
sweet.
ever seen.
Yeah,
Unbelievably cool.
they're really cool. I agree. Shilpi, you're up next.
I'll call it flat. Let's put it at 65.
65. Johanna.
70.
All right. And the last one, lithium carbonate. I don't know if anyone's been paying attention, but the lithium carbonate prices over the last year have looked like the 5-year projections of a seed stage startup. Like, it is ridiculous, up and to the right. A year ago, $9,000. These are lithium carbonate primary input for lithium ion batteries. It's traded in China. Last year it was at about $9,000 per metric ton. Last month it was $35,000 per metric ton, and last week $50,000 per metric ton. Shilpi, what is going to be the trading price on the last week of 2022 per ton?
Gotta call it 100.
Whew. Johanna.
I was gonna say the same.
Shayle.
Flat, 50.
All right, it'll be interesting to see how that supply chain works itself out. All right. All right, yeah, pull the slides down. Thank you, Dylan. All right, for our last section of predictions, this is the section I call Big Bold Bets. I asked our contestants to come prepared with their big winners for 2022. That can be interpreted different ways, but I want 2 winners, a winner from the private sector, privately held company, and a winner from the public markets. We'll be able to track the public markets. We will take a look at that stock price later today, and we will look at what it is at the end of the year, and we will report back to everybody. So why don't each of you give me both of your picks, your private pick and your public pick. Johanna, I'll start with you.
Okay, I'm going with a subsurface theme for my private and public picks. So public company, I'm going with Ormat, ORA. This pick is actually less about Ormat in particular and more about geothermal in general. So maybe that's not smart given how you've set up the contestant, but geothermal has had an incredible couple of years, and early indicators are that land grabs are heating up even more for 2022. So any company that has a decent footprint and ground game in geothermal, I think, is going to do well from an impact perspective. We'll see how that translates to stock price. And then to bookend that.
Oh, and caveat for private, none of them, you cannot choose from your own portfolio.
Right. The keeping with the subsurface theme, an example of a company I'm excited about because of the broader theme it's part of is Cobalt Metals, which is using AI and data-driven exploration to characterize the subsurface and identify geological features that correspond with cobalt and other rare earth minerals. I think it's totally brilliant. I think it's the tip of the iceberg. I think there's a lot more we can do with kind of next generation data tools when it comes to things we used to do with picks and axes. And I'm really excited about any company in that category.
Awesome, thank you. Shayle. Who are your big winners?
Okay, private company, I chose Intersect Power, which is one of the largest developers of utility scale renewables and energy storage in the country. I think like we forget about this in VC circles, but it's a really good time to be in the business of building utility scale clean power. And if you can add storage to that, even better. And if you intersect, and then you're also thinking about the next set of things you're going to be able to do with that power, which is produce green hydrogen and power DAC systems and all this kind of stuff, it's like there's no better place to be. So Intersect's going to kill it this year. Public company, I chose Sunrun. Sunrun had like a big run up in the public markets, and then over the last 12 months is down like 60% for reasons that are kind of unfathomable to me, except the Build Back Better didn't pass, and so we don't have direct pay for resi solar. But nonetheless, like, you know, great execution, positioned really well, getting into all the cool new stuff. Their partnership with Ford is super interesting. It's a vehicle, it's like, you know, if you buy a Ford F-150 Lightning and partner with SunPower, you can use your Ford to power your home. It's like 10 power walls in your car. It's super interesting. So I stick with Sunrun for my positive public market story.
Nice, good picks. Shilpi, what do you got?
Okay, public company. I think there's going to be a lot of work that happens in domestic battery production. So you can like think about it from the automotive lens or the battery lens, but I think I'm going to go with Panasonic. They did some interesting work on the Gigafactory. I think there's they've kind of been under the radar, but I've had the chance to visit some of the sites that they're developing in the US, and I think it could be a year for them as there's more and more need for lithium ion. I don't know how much we're going to be reliant outside of the US. I know Europe is also doing a lot of work on battery production as well. For private companies, I want to give like a roundup on green cement. So it's like Brimstone, Sublime, Carbon Cure. There's a few, but I would maybe go with Carbon Cure as like, I think that it's going to be a big year for actual commercialization in those technology cycles and being able to have some real volume come out of green cement production. There's definitely market demand for it.
Awesome. If you don't mind, I'm going to play along too. I picked a couple winners. So playing off that last segment, I'm going long lithium. So on the private side, I'm actually going to give a hat tip to a darling of the Azolla Ventures portfolio. I'm going with Lilac Solutions. So they're still early stage, but I feel like 2022, they are in a very, very prime position to capitalize on their technology, which enables them to capture lithium from salt brines rather than having to mine it. And considering the demand that exists in the market today, I think they're very well positioned to hopefully maybe sign some very large contracts. And in the public markets, I'm looking at Albemarle, so I'm going high up in the supply chain. They're one of the largest, or I think the largest supplier of lithium to EV battery manufacturers. Today, they're up a couple points to $224 a share, so I'm going to Albemarle. All right, so then to close it out, I wanted each of our investors to share with us their most contrarian belief in 2022. Shilpi, let's start with you.
Well, there's been a lot of reflections on the carbon markets on this panel, and I have to say I am a disbeliever on carbon markets as a real business model for climate tech companies. I think it's a short-lived, it's going to be a short-lived momentum of corporate funding for using carbon credits to and offsets as a real indicator of change. I think I'm looking for like real systems transition. And so, yeah, I don't usually let revenue streams from carbon credits be a meaningful player in evaluating a company's commercial potential.
Interesting. Great. Shayle?
It's actually kind of hard for me to tell like what's contrarian at this point, because in this sector, I don't really know what to say, other than a view that I have that I certainly would have been contrarian until maybe the past year or two is biofuels are coming back, not for passenger transportation necessarily, but for a bunch of other applications. It was like, there were basically two things that sunk clean tech in the first wave. It was thin film solar and biofuels. And so there's a lot of like residual hate for biofuels, but there's a next generation coming that is different tech with different inputs for different outcomes in different markets and actually gaining a fair amount of traction. So
Well,
biofuels.
one market do you think are they, I mean, that is pretty contrarian, just blanket to say the word biofuels, but what market do you think will biofuels win?
I mean, sustainable aviation fuels would be the obvious
Yeah.
one, right? It's not necessarily a long-term winner and the exclusive winner, but there's going to be substantial procurement of bio-based aviation fuels over the next couple of years.
Yeah, and you did an episode recently with someone breaking it down, all the SAFs, like, right? Because like SAFs could be electrofuels; they don't have to be biofuels, right?
That's right. But most of the early procurement, like what we're seeing right now, all the blending that's taking place today is bio-based sustainable aviation fuels because we could do it today. Now, 10 years from now, maybe it's electrofuels, but in the meantime.
Interesting. Well, I mean, right. We should point out, like, why is contrarian interesting, right? The saying in venture is like the only way to make money is to be contrarian and right. If you are right and aligned with what everyone else thinks, you're not going to make any money. So like you have to find that opposing viewpoint and also be correct. Johanna, what's your contrarian perspective?
I also don't know if this is contrarian, but it's probably under talked about. It's that I believe in 2022, there will be a high profile climate tech disaster. So not a climate disaster, but a disaster caused by or associated with a climate tech company, like some big materials handling mishap or CO2 explosion or something that dramatically refocuses our concentration on, as investors and just company builders, on responsible community engagement and stewardship, which I think is not sufficiently on the radar of a lot of early stage clean tech companies and investors currently.
Paul, you're going to give us yours.
Yeah, so my contrarian view, I don't know, you can tell me if it's contrarian or not, but I was thinking like the highest impact, so forget investing in like how you're going to make the most money, but the highest impact climate related sector to me is not renewables, it is not energy storage, it's not hydrogen, it's not direct air capture, it's not EVs or decarbonized aviation. It is advanced materials. It's the sector that sits above all of them. And I lump in specialty chemicals with advanced materials because that's really just the liquid form of advanced materials. And ultimately, the reason I say this is the highest impact is because if you look at every industrial challenge, whether it's like dendrite formation in lithium-ion batteries or just solar cell efficiency, these are all materials challenges. Improving efficiency of electrolyzers, the fuel cell, it's a materials challenge of the membrane or the catalyst, hydrogen storage and transportation. This is a materials challenge yet again. And so my contrarian view is that advanced materials is the highest impact climate tech sector. And with that, I would like to, I think we are right on schedule. I would like to thank our fantastic contestants, Shayle, Johanna, Shilpi, thank you so much for joining us, and everyone out there in virtual Zoom land, thank you so much for joining us today. I hope you enjoyed it. If you're interested in funding opportunities with Evergreen Climate Innovations, please go to our fantastic new website. But everyone, thank you so much. Again, this was for informational purposes only. But we will track these predictions and report back to everybody around this time next year. Good luck to our contestants on being named the Evergreen Futurist of the Year. And thanks so much, everybody. Have a great day.